This is your LMAX exchange technical update for Tuesday, August 9th. Euro-dollar. So the euro remains well capped into rallies, most recently by the 100-day moving average, and it looks like the market wants to trade down to next key medium-term support at 109.12, which represents that low from the 24th of June. A break below will then expose 108.23 further down, which is the low going back to March. At this point, only back above the 100-day moving average will put the pressure back on the top side. Sterling dollar. So this recent breakdown below internal range support around 130.55 is a significant short-term development, and it exposes a more immediate retest of those recent plus 30-year lows, which come in just under 128. At this point, it'll take a break back above 133.72, the high from last week, to take the immediate pressure off the downside. Dollar yen. So dollar yen has seen a little bit of a bounce in recent trade, though overall the market is expected to be capped into rallies with the downtrend firmly intact. Look for any rallies to find some good resistance ahead of 104 in favor of the next downside extension back towards a retest of those recent 2016 and multi-month lows at 98.99. Euro Swiss. So a bit of a pop in Euro Swiss over the past few sessions, but overall, as you can see here, the market hasn't really gone anywhere since back in early June, and it's going to take a break above 109.45 or back below 107.78 for a clear directional insight. Aussie dollar. So Aussie has rallied up over the past several sessions, though the market is coming into some good resistance by 76.77, which is that high going back to the 15th of July. If the market establishes a daily close above 76.77, this will take the pressure off the downside or any hopes for a downside reversal and open the door for a retest of the 2016 high at 78.35. At the same time, if we do see the market hold below 76.77 on a close basis, it will suggest another topside failure ahead of the next major downside extension back towards key support at 74.21, below which exposes more significant support at 71.45 further down. Dollar CAD. So dollar CAD is in the process of carving out a major base after breaking above some critical resistance at 31.89 the other week. At this point, look for fresh upside beyond the recent highs that we saw around 132.55, which will open the door for a move up towards the 135 to 140 area. Any setback should be very well supported ahead of 28.62. Kiwi dollar. So Kiwi looks to be carving out a lower top here below that 2016 high at 73.25, with the market now seen back towards 69.52, next key support in the form of that low from the 21st of July. At this point, only back above the recent high that we saw at 72.57 would take the immediate pressure off the downside. SPX 500. So the S&P 500 continues to trade up to record highs, another record high in Monday trade, but is showing signs of exhaustion. However, the market would need to establish back below last week's low around 21.47 to alleviate immediate topside pressures and open the door for a more significant correction. If we don't see a break back below 21.47, the pressure remains on the top side for a push towards next key psychological barriers and record highs around 2200. Gold. So gold has seen a bit of a setback in recent trade, though ultimately the market remains highly constructive, and any setbacks now should be supported into the 1300 area ahead of the next major upside extension through 1400 and towards 1500 further up. The first initial measured move objective comes in at 1400, and we'll look to see a test of that level on a break above the 2016 high, which comes in around 1375. Only a close back below 1300 will take the immediate pressure off the top side.